You're welcome back to Business Morning. Okweyemi Oguntade is a senior investment officer at the Financial Derivatives Company Limited. She joins us right now in the studio. Good morning, Okwe.
Good morning,
Glad to have you. Let's talk very, very quickly on the commodities market. Of course, crude oil is part of that. What has changed between Tuesday and now, the last time you came on the show?
Well, everything is pretty much the same thing. I mean, crude prices are still going down. What we know is the Energy Information Agency released its report yesterday, and it actually showed that crude inventories increased by 252,000 barrels. So, although that's like significantly lower than what most analysts were projecting, about 1.9 million barrels, but still it's still an increase, and this has led to the decline we're seeing in crude prices. In fact, WTI touched about $39 per barrel yesterday before it came back up to $40. So for the crude, for the oil market, it's still looking really bad. I mean, the supply growth is still very much present.
Like Saudi Arabia is also increasing its supply in the market. It seems that they're not relenting in pumping more oil into the international market.
They're not even going resilient.
And that may not spell good for a country like Nigeria.
No, it wouldn't, because I mean we depend on oil for most of our revenues and forex earnings as well. So this is not looking good for Nigeria.
Let's take a look at the agri-commodities. We've talked about cocoa, which has always been on the increase. But let's look at corn right now. The same prices increasing. I know that for most farmers, this is a new planting season for them.
Yeah.
Now, how are these commodities doing?
Well, for corn, what basically spoke the prices for corn this week was the fact that Argentina, which is like the 6th largest producer of corn in the world, it's harvesting, or rather its planting report showed that it's only 36% complete against what it was the previous year. So this spoke to investors in the market to to buy up more corn futures, because they're expecting that we'll probably have less corn production in the market.
And of course, demand is still on the increase.
Demand is still on the increase.
Many people consume corn.
I mean, corn is nice, isn't it? Don't you like corn?
Well, I do. Whether it's the ones on the can or the one you have to buy on the roadside. Let's take a look at wheat.
Yes. Okay, so yeah, wheat prices are trending down because of recent the dollar has gained against the basket of currencies, and obviously the commodities market is a dollar-denominated market, and this is affecting the demand for wheat, especially from the U.S. So this is affecting the U.S. Ability to supply wheat to major demanders of wheat, and this is what's pushing down prices of wheat in the market.
Okay, sugar futures is down.
Yeah.
Surprisingly, why is that so?
Well, for sugar, I don't know if you've noticed, but sugar was actually coming up between last week and this week. But the Indian government recently, decided to give some kind of incentive to the sugar millers to export more sugar. And what they said was, we're going to subsidize your payments to the sugar cane farmers. And the only way you're going to gain access to this subsidy is if you are able to export at least 80% of your sugar cane to the market. Because, I mean, we're not just going to help you cut down costs if you're not going to do the work of actually selling that selling that product or trying to subsidize for you. So basically, the Indian government has come out to say, we're going to give you subsidy, but only if you push out more exports into this market. So this is what's spoken the market right now in the sugar market, and that's why prices are coming down.
What's the outlook for the market? When we look at commodities like wheat, and the sugar thing as well, perhaps the futures, perhaps it may have to be on the downside for a while, pending when the supply will be cleared in the markets.
Okay.
What's your outlook?
Okay, for wheat, I expect wheat prices to keep going down because the market is oversupplied, as well as coupled with the fact that the dollar is strengthening. And then I expect sugar prices to, the decline we're seeing in sugar prices, I expect it to be temporary for the time being, because the exports aren't going out to the market right now. It's probably going to take a while before it comes into the market. And if you look at Brazil, we're actually having adverse weather conditions in Brazil due to the El Nino weather patterns, and Brazil is the largest producer of sugar. So we're having a supply deficit coming from Brazil and a supply surplus coming from India. So it depends on which outweighs which. But for now, for sugar, I don't think sugar is going to go too low in the coming days.
Can we talk about the domestic commodity spot prices a little bit before you go?
Yes.
We're seeing growth rates expanding to 2.8% in the third quarter of 2015 and from 2.4% in the second quarter. Why are we having this rate this growth rate?
Well, for the growth rate, I mean, when you read the NBS report, it's mainly coming from the fact that we produced more oil between the second quarter and the third quarter. So oil production went up, and this is what is really driving the growth rate we're saying. So it's not exactly coming from the domestic commodities side. But for domestic commodities, prices are pretty much the same. But we expect prices to start coming up towards the end of this month, because obviously there's going to be an increase in demand. Like Rotimi said earlier on, with the Nigerian brewery stocks likely to go up, because now you're going to have more sales towards the end of the year. So if you just apply that same principle to the commodities, domestic commodities market, that's what we're likely to see. Prices are going to start coming up because we're going to have more sales within this period.
Okay, I think that will be all.
Thank you.
Thank you so much for your time. Okwemi is Senior Investment Officer at the Financial Derivatives Company Limited.